So now we're going to be having a panel conversation. We've heard about why food tech is a great investment opportunity. We've got the pros. Now I'm looking forward to a bit of a challenging conversation, which is going to be moderated by Philipp Stangl from Rebel Meat. And we will also be joined by Stefan Ratgeber from Graphite Neotaste, Markus Linder from Triple Impact Ventures and Inoko, and Sarah Bocking from Zint Inus. Please give them a warm welcome, everyone. Oh, there they are.
Perfect. Thank you so much for having us today, for joining us for a session on food tech. Thank you, Gregor, for this very interesting keynote, which already gave a couple of thinking points, I think. I want to start off by probably asking you to do a really quick intro, and also maybe asking you what brought you into this space. But let me maybe start with you, Sarah. You've been a consultant. You worked for a generalist impact VC, now working for a specialized food tech VC. What really brought you to this, and how did your thinking go to now join a VC really focused on food tech?
Yeah, so when I first met my now bosses, I was like, why would I join a food tech VC? I love impact, I love energy. And the more I actually spoke with them and I saw the passion to really transform the food system, and I started looking into how much of the emissions come from the food system, I decided that this actually is something I would love to be a part of, and it's been a very fascinating journey. I think starting out, I was like, how much is there actually to learn about food? And I can tell you, 1.5 years in, and there's so many calls where I'm surprised by what's possible. I mean, same when I first talked to your co-founder, I was like, amazing, proteins from CO2, how is that possible? So it's actually one of the most interesting spaces, in my opinion, to be working in.
Great. Stefan, you spent more than 13 years in the FMCG space, and now moved also in an investment position, focusing on food, maybe more on the brand side of things. What is it that you find interesting about this industry and also about investing in this industry?
Well, number one, food is a very emotional topic. Food literally connects people. I think there's nothing better than sharing a good meal together or a drink together. I think everybody can relate to this. So there's this emotional component. And yeah, we want to bring this into our portfolio companies, into our future portfolio companies. We believe that there's lots of room for improvement regarding the food tech industry. Yes, we do focus on rather the brand aspect, but we also welcome food tech solutions.
Great. Markus, you had a very successful career as an entrepreneur in the software world, then deciding to use your own money to invest in impact and also in food tech, but also even moving back into an operator space in an enabling startup in the food tech space. What's your passion for this space? As you probably had so many opportunities. Why did you decide for food tech?
Yeah, exactly. Really excited to be here. So I started my career as an entrepreneur in 2006, founded Suvu, a startup that has raised more than 200 million in capital up to this point. After leaving from an operational point of view after 12 years, I basically took a year off with my family, and we traveled through the Nordics, Norway, Sweden, and during that time, I learned a huge amount about the climate crisis, about the biodiversity crisis, and I realized that the food that you and I and every one of us is consuming every day is responsible for 1/3 of the global greenhouse gas emissions and is responsible for 70% of biodiversity loss on land. And that really, first of all, triggered in me that there's nothing more exciting, nothing more important than starting to invest into startups in the climate, biodiversity, and pollution space. But also, that was really the foundation for then founding Inoko, my second startup baby, which is a software as a service solution that enables grocery retailers FMCG brands to assess and reduce the impact of their tens of thousands of products, to really have an impact and to really move things on that side. And also because I'm really convinced that sustainability, including food tech, is the biggest opportunity, investment opportunity of our time. It's huge, amazing developments ahead of us. And I could ride the digitalization wave, and this is now the next wave. That's the one I want to be in from an investor point of view, but also from an entrepreneur point of view.
Super interesting story. Thank you so much. Gregor, to conclude maybe the introduction round, you've been a successful researcher. You did that for a long time in many national and international universities, and then you decided to go the route of an entrepreneur and also in the food space. What is your motivation behind it? Where do you see the potential in the space?
Yeah, so my motivation started from what I was mentioning before a little bit, this rabbit hole I was diving in my early 20s. I was always focused and really interested in producing things more sustainable, goods in general, but I'm also a passionate chef. Like, I love to cook. This is my great passion. And I still remember when I was moving out, like from my parents' place to Vienna to study in the first place, I was like going to the supermarket. I had no money and I was still buying a chicken or something. So I was still eating meat that time. And the chicken, when I was frying it, was just shrinking half size. And that brought me into the rabbit hole, like, how can that be that when I go with my mom shopping, I'm getting this high quality chicken piece, and when I'm having just my €2, that I'm getting that piece. And that brought me down a rabbit hole on how food is produced currently at the moment, and ultimately got me convinced that this is the path I want to follow. Also in academia, I've always been in like ingredients production, sustainable ingredients production. And yeah, when Archeon's technology and core tech came up, it was a no-brainer to pursue that and just be part of a solution.
Great. You mentioned in your keynote also the S-curve adoption. There's also this other technology adoption curve we all know, where there's a big downward facing slope. And I think we all saw that in the food tech space after a huge boom stage with Beyond Meat and Oatly and other companies going to the stock market, having big IPOs. Now their stock market is less than 5% of the peak. We had huge price increases after the war started in Ukraine. And so clearly we saw the curves going downward. Sarah, from your point of view, what is the current state of the market? Are we slowly stabilizing? Is this a good time to invest in food tech already, or are we better off taking a cautious approach?
I will give you the most consulting answer ever. It depends. So actually, Digital Food Labs, and I think you mentioned this curve. They publish this every year, and then they map the technologies where they currently are. And I think there's a couple of technologies that have already went down through this fall, and that are now ready to kind of stabilize. One of them is plant-based. So we're moving from first generation to a second or third generation. We're moving to companies like La Vie, one of our portfolio companies, or Planted, that have managed to really produce products in alternative protein that taste almost as good as the original, that have way cleaner labels, that are actually very good for you. And I think these brands that are now kind of through this fall, we now see the future of that market. And those companies investing in like Series B or C, I think there's a lot to gain. I also think there's a big hype surrounding, for example, precision fermentation currently. There's a big hype going up on things like alternative cacao, but also molecular farming. And for those, as an investor, you need to be very cautious of the valuations, of how much revenue can be produced with those companies, because we can be sure the drop and the valuation drop that we have seen in alt meat will also happen there.
Yeah, it's definitely, some timing is definitely very difficult with some of these technologies. Stefan, you have just decided, together with your partners, to start an investment company in the food space. Why now? Where do you see this, the state of where we are in the slope? And is probably investing in brands a bit different than investing in technology?
Well, yes, it is. Why do we invest in food? First of all, our founder's family is very interested in this area. So they have a passion for it. And passion is what's driving us ultimately, leading back to food being an emotional topic, right? So that's why we decided 6 months ago that we add to our two other focus areas the area of food. Our other focus areas are the automotive industry, that's the DNA of the family, and investments in lifestyle and beauty. That's another passion area of the family. And to answer your second question, I also believe it's a good time, first of all, because of the valuation drop. So I think it's on a more realistic level now. Investment streams rather went into another direction, right? So that's why you can actually, as an investor, make a good deal currently. You're in a good negotiation position, to be honest. And yeah, as we all mentioned and heard earlier, I think there were major learnings in the past couple of years regarding the food industry, be it food brands or tech solutions.
Are investors getting good deals right now? What's the founder perspective on this?
No, it's fantastic. So, no, it's tough. It's tough, and it's tough for everyone. We in my founder circle we have this. We call it the founder psychotherapy group, where we just like catch up regularly on the developments, and it's just a tough period. I can only second what you said. We see these valuation corrections. I think they are good. They are important that these corrections happen. But it's a tough period out there. And I think for us, it's also to be seen how we can survive as companies, because there is, I think, if you invest in a company like Archeon, I'm not selling Archeon now, but I actually do. But we have longer funding cycles, right? So I think it's also to invest in this point of time in companies like Archeon or many other precision fermentation companies can yield to a substantial upside also for investors. Seeing and appreciating the S-curve that we really feel already. We already feel that the entire space has more clarity on how to grow and in which angles to grow, and not just growing the tech, but also the entire supply chain and value chain around that. So it's tough, but we hope investors are convinced to also invest in these spaces now.
Actually, adding on that, something very interesting, which we are seeing now with this market corrections, you see companies really stretching their money so efficiently, and really being so innovative with not as much. For example, Firmify in Austria, they just got their cross approval with, I think, 6 million total funding. There's other companies who've raised multiples of that and who are still not at this approval point. And I think it's because when they raised, it wasn't as easy to raise anymore. They knew they need to show something for their new round. And actually, I think it might be like the last crisis we have seen, where big companies and very successful startups came out, that this is now a push where money is limited, where companies are very good at stretching the dollar and being smart with their money and really coming up with cost-efficient solutions, because that's what the market needs. We don't have a green premium anymore. People are not willing to pay more, and this way there's solutions that don't cost the world and that are actually at price parity, enabling us to produce more sustainable products.
I think that's super important characteristics of Foodtech versus other verticals. Marcus, with Triple Impact Ventures, you invest in Foodtech, but also in other verticals. What are the key differentiators, or what are the maybe potential obstacles also in Foodtech compared to other verticals when you look at such deals?
Yeah, I mean, we saw in 2020 that 8% of the venture capital investments went into food tech, and 2023 it was down to 4%. And there was a lot of hype, but there was also a lot of investors burning their fingers, and kind of that now really leads to it. And we are invested into companies like Archeon, like Firmify, like Rebel Meat, so we have really good insights into the situation. But that really led that a lot of investors pulled out of that space, which now led to the situations that valuations really came down, which, if you choose the right company with the right business model, is a great opportunity now to invest. But I agree with you, Sarah, that you really need to choose wisely and not just pick any food company that you can find out there. But the big difference is really that you had a more extreme, let's say, dip in terms of the food investments, while the climate tech segment stayed much more resilient. So you don't have that huge drop, or at least we didn't observe that huge drop there. And I think that's, I would say, is the big difference.
Let's maybe stay on the topic of portfolio construction for a little bit. Would you say every generalist investor should have a little bit of exposure into food tech, or would you rather say food tech is so special, I would only recommend it to people who specialize in this field?
I have different opinions on that depending on from which direction I'm looking at it. On the one hand, I think food tech, climate tech needs money from the general investors. They have lots of money, deep pockets, so that needs to go into that space. On the other hand, we, from a triple impact ventures perspective, also have deep respect from certain areas where we only co-invest with very knowledgeable investors, like something like Archeon. We would never do something like that on our own without having had very strong lead investors. Or so I think it depends. But in general, yes, I think general investors should go into food into climate tech. But I think they should only do it in combination with specialized investors who really know the space.
Gregor, maybe asking one more time for the founder perspective here. Do you think, would you rather have a specialized investor on your cap table for any specific kind of value add? Or do you say, well, at the end of the day, it's the same obstacles and challenges that every startup has, so it's more about an experienced investor who knows kind of the general roadmap?
Yeah.
How do you think about that?
I think it's a mixture. We also see it on our cap table that and now since we're also raising and I see the support of and the different kind of support of investors is super valuable. So the investors active in the food tech space, really valuable. The ones that merged also with climate tech, also very interesting for us because we are consuming CO2. But also the generalists that support us in different other aspects when it comes really to the day-to-day issues every startup has. So I think the mixture is really important. And on that note, also corporate investors. I think that is something we love to see on our cap table because it's a totally different perspective. It's important also to grow your business if you're capex heavy, but that's where we also see that this mixture has a good vibe for us.
Sorry, as a specialized food VC, what's your thoughts on this? I mean, you're probably a bit biased here, but do you like to co-invest with generalized investors? What's your take?
We do, but we need, it's easier to mix a deep tech investor with a food tech investor because they understand the cycles. They understand that it takes a long time to research, a long time to development, and then the customers will test and then the launches sometime or quite some time in the future. So it's easier to invest with those kind of funds than with a, let's say, generalist software fund. That would be very hard. But we actually love to co-invest. So we're currently leading a B round of a quite interesting B2B startup together with a generalized investor. And what we bring to the table is very different, right? So from us, it's a lot of the retail connections. It's an understanding how you get into the customers. It's the network. From them, it's a lot of experience in Series B and C. They're significantly better in understanding, okay, what's normal in a deal in the US. And together, we really listen to each other and we really are value add to each other. And actually, even in the way that our funds are structured, we have 4 general partners. 2 of them are from food retail. 1 of them is from early stage generalist investing, and 1 of them is from private equity. Because even within our own fund, we take the perspective, not one person needs to know everything, but we need different aspects of this venture capital life cycle. So to answer your question, I believe that a specialized fund, or at least a fund who understands food, should always be on the table. And then having other funds around who listen, who exchange, who help each other, that's a very, very powerful combination.
You mentioned a couple of the differences in food, especially. What is it that you look at when you evaluate food technologies? I mean, there are some certain certifications, right, in the EU, but also, of course, in other areas as well. Would you invest in things that require going through the novel food certification? And what are other things that you look at from a very technical point of view?
So one important thing about our fund, the definition for us of growth is revenue. So we would not invest in a pre-revenue company, and by definition, we then don't invest into companies that haven't gone through novel food. So what do we look at? Well, first of all, of course, you check GRAS or the European equivalent of GRAS, so novel food
So
approval.
GRAS is standing for generally regarded as safe, which basically means,
Yes, apologies. It's the US novel food certification. You first certify yourself, and then the FDA checks that, and then after like a year or so, you then also get the official class. So with that being said, of course we check that, but then it depends a lot on B2C or B2B. For B2C, we might also check the tech and understand how scalable is it? Where do we produce? Is there any contamination risk? Is the labeling right? How does it work in retail? Does it need to be cooled? How is the cooling chain? So that's on B2C. On B2B, we then try to understand also production. Is production already certified? How can it scale up? Are we still at lab scale? Are we at pilot scale? How do we move from pilot scale to large-term production? What are the pitfalls there? What do we need to look out for? Have customers already audited this factory? And then following this, we need to understand what actually is the way to get into customer products. So let's say you have a product that cleans up the label of a tomato sauce for Barilla. Then we try to talk to Barilla and some other companies and understand what is your research and development process, right? So how long does it take to go from testing to being on shelf? Will you start this as a new product, or will you already replace that? So it's a big portfolio of questions you need to look at. And sometimes I get business plans from startups that might have founded software before, and it's this. And I'm like, so within 2 years, you want to do 50 million in revenue. How will you support us in production? And they're like, yes, but we're already at here. Like, yes, but have you talked to the customers? Do you know what all can go wrong in production? So to get this curve up and running, it's significantly harder than in other industries, and you need to understand that, and founders need to understand that, need to understand how the customers work.
Yeah, scaling is of course a super important issue. I want to maybe first bring Stefan back into discussion on and switch gears a little bit to the B2C side. I guess at some point every food product needs to be sold to the end consumer, and many chose the way of going through a brand. Would you say for an innovative product, is this the right way to have your own B2C brand, or is this then too much full stack, right? Developing technology plus developing the brand. Would you say branding is rather for low tech innovations and bringing that to market, focusing on the marketing side? Or do you think like innovative solutions should also go full stack and build their own brands?
I think having both is a good strategy. It's a good strategy to gain some awareness, some traction for your topic. So I would consider that as a very good tactic. Obviously, building a brand doesn't happen overnight, so it's sometimes also connected with quite some investments. On the other hand, if a brand takes off, if you really manage to build a love brand, it can really gain traction very fast. So yeah, to our mind, both ways is a good combination. What I do want to add is that I really welcome that the industry and startups focus again on taste. So I think in the past we had quite some products that failed in markets because they didn't taste well. But consumers buy taste, right? They don't buy technologies, they don't buy sustainability, they buy or rebuy taste. So that's something that I really welcome.
I have a little bit a different view on that. I founded both of my startups as B2C startups, and it didn't work out. Initially, that's important. And as you can see, I'm not getting smarter. So the first startup, I started B2C. The second one, I started B2C. And with both of them, I pivoted to B2B. I think it requires a completely different set of skills. It's hugely difficult to build up a strong brand, a strong consumer brand. It's very expensive, and it's a very big stretch to have a team who can do both at the same time. develop like, a deep tech solution like Archeon, Firmify, you name it, and at the same time building up a very strong consumer brand. This is why we would be rather, let's say, cautious in terms of invest. I mean, we anyway don't invest into brands because we don't really have much to put onto the table from a consumer brand perspective. Rebel Meat was more an exception here, an early exception. Yeah, I just feel it's a very big stretch, very difficult, and we rather like to see startups focusing on one of those, like the deep tech side of thing, and then partnering with strong established brand for the go-to-market. But this is just my or our view, also based on our background, based on our lack of experience in successfully building out consumer brands. And yeah, maybe there are those genius people out there who can do both at the same time.
Yeah, but interesting perspective. What I think we can all agree on is if you manage to build a big brand, it is a huge asset. But maybe double down on that. How do you do that, right? Like in the last couple of years, I think we've seen a lot of influencer-driven brands where people that already have the distribution and can build a brand on top of that. How do you build a strong brand today with so much noise, with social media already overcrowded, etc.? Is there a recipe for that?
There's no secret formula for that, and it's getting harder and harder. Yes, social media, I mean, customer acquisition costs are tremendously high, meanwhile. So I think there's different tactics. Startups probably need to focus more on guerrilla marketing activities, really trying to connect with their core audience on a smaller scale to kind of grow that love brand community. But yeah, I agree, it's not easy. Or you can do it like the big corporations do it with quite some media budget, but that's usually not what startups have in their pocket, yeah.
All right, maybe switching gears a little bit again, coming back to the scaling approach, maybe also the business model approach. You mentioned, of course, scaling is the hard bit. Would you say typically startups will build up their own production and maybe supply chain setup, or should startups more focus on licensing technology? Maybe, Gregor, do you want to start? What is your business model? How do you see it? And maybe Sarah, then add your perspective on what's, from an investor's point of view, the preferred approach.
Just hope they can like listen and learn. But so what Archeon follows is a licensing model first. It's very expensive to build up infrastructure if you're in fermentation. So we are in strong collaborations with incumbents, fermentation companies, other companies that can like help us in the scaling journey. And we also want to forge these partnerships in order to yield this licensing agreement. So we have LOI signed with companies on exactly that part. Licensing first, and then using cash flow streams to ultimately build up manufacturing capacity yourself. It's an entirely different business model. It needs different people. It's not like B2B and then building a brand, but it's still different. But that's the way to go, also to be conscious with the investments to be taken. So that is the approach Archeon is following, and I would love to learn if that's the right approach.
It depends. So we see both, most definitely. There's companies, there's a Swiss startup called New Roots. They do cheese, and they do everything in-house, even including having farmers who build the lupine for them that they have developed with the farmers. And actually, they are highly profitable at a very early stage. So for them, that works because they have figured out very cost-effective ways to build this, and they manage it in-house, and it works really well. For a lot of startups, they might build the first facility in-house, and then they try to understand how can they work with existing infrastructure. So for example, Nosh Bio, as a mycelium company, they retrofit breweries. So it exists, they buy those breweries, or they might work with breweries saying, can you produce this for us? We will pay you for it. So they use existing infrastructure of industries that are not used as much anymore. So that's one option we see quite often, trying to understand how can we use existing infrastructure without having to build everything ourselves. Then there's the companies like Win-Win, Planet A Foods, and all of the cacao companies. that do part in-house. They have managed their fermentation process. They understand how do we produce this powder, and then they go to co-manufacturers to actually produce the product that will be sold. And I think the bottom line for all of this is do a calculation. What works best? How do you reach break even the fastest? How do you manage your working capital? And to answer your question, it depends very much on, can you give your secret to someone else without compromising your technology? Is there someone you can partner with easily that will be a good partner that will help you with credibility and help you with scaling? And how do we get to a positive EBITDA number as soon as possible? Because even within food, we're really trying to get our startups to be profitable before they reach Series B, C, to then be interesting to private equity investors who are also used to a lot of software models.
I would maybe add on, I can only second what you said. It's really about availability. So what are your options that are down there, right? And different depending on the tech, and if you're deep tech, if you're maybe not as deep in tech, you have different availabilities out there. So for why we chose at Archeon this approach was we kind of go to literally anyone because we are converting CO2 into food. So there is no infrastructure. There's very little CDMOs, so contract manufacturing facilities that are offering those services. And with those, you have to choose a strong partner with deep pockets that is willing and incentivized to walk this path with you. But I fully agree. But there's all these different options for different approaches out there.
Maybe just seconding on what Sarah said, Win-Win is also one of our portfolio companies, and I really also like the approach that they're building like a copy of famous chocolate brands out there. I mean, it's not like a one-on-one copy, but you understand that they're trying to mimic that product out there, and they're producing that at a small scale and actually also kind of selling it through their online shop, but then also shipping it to those big brands and say, hey, look, this is how we can produce that's very similar to what you're offering, just without cocoa, with much more stable prices, much more stable supply chain, less environmental and social impact. And to get started and to learn, I really also like that strategy. But I think this full trying to do everything in-house yourself, I, from an investor perspective, have too much respect to make big bets on that.
I just want to ask, are there any burning questions from the audience right now that we should take into account? If I don't see any, I will just continue. If you have any, please just give me a quick show of hands and then we can try to incorporate them. I want to touch on another issue, which sometimes comes up in discussions. So I feel like we have these very different approaches sometimes of this very high-tech route of where we're going to go with the food industry, precision fermentation, cellular agriculture, etc., etc. And then we have maybe on the other end of the spectrum, the, I would say, very nature-based, but tech-enabled approach of like regenerative agriculture with smart digital agricultural tools. Do you think this is kind of a contrarian view of either high-tech or smart tech-enabled nature-based, or do you see these converge? What's your point of view, Markus? You seem to have a strong opinion on this.
Yes, very strong opinion on that. I mean, we should not forget that consumers are people, and people are really, they have their culture, they have their behavior, and it's really, really hard to change behavior over time. So one of the core things that we try to do with Inoco is also to take consumers along onto the journey towards a more sustainable and more healthy nutrition. By really, enabling the retailers to, for example, like Albert Heijn, one of our customers, the largest retailer in the Netherlands, to share the climate footprint of their products with consumers, so that you as a consumer can understand the difference between, consuming a steak and maybe a plant-based alternative from a climate perspective. But we are all people, and it takes ages for us, including myself, to change our behavior. So if we believe that we can switch from one day to the other, from conventional farming as it works today to precision-based fermentation, and believe it's either one or the other approach, we will massively fail. So it needs this blended approach where we try to make the way how it works today, more efficient, more climate friendly, healthy. But at the same time, we need to invest into technologies that kind of de-risk food production by taking agriculture out of the equation. I mean, we are, we are already seeing now the impact of climate change. We have floods, we have droughts, and we will have huge scarcity in terms of, certain crops which we are eating today. So there is a huge need for alternative approaches, but I don't think we can just, from one day to the other, replace the one by the other. We need to ensure that through implementing regenerative agriculture, our farming sector gets more resilient, is less susceptible to droughts, to flooding, can sustain those periods for a longer period of time. But at the same time, we need to invest into ways to produce food without requiring land. That's for sure.
How about your perspective? Do you see this two different routes where we're going, or do you see everything is going to the same direction, but just with different approaches, probably changing the status quo versus completely redesigning the system from the ground up?
So we don't do agtech, but I can answer it from a food tech perspective. I think you need to, get people where they are. So does it work to put a burger in front of someone and say, okay, this is grown in the lab, eat it now? No. But will we grow into that acceptance? Probably. So I love solutions where founders have a vision. They say, we might have this product now. Let's take alternative cacao. First step is we use a product that's almost the same. It's just based on different technologies, and we replace cacao. You almost don't taste the difference. So people then realize, oh, we're eating something which is actually based on sunflower seeds or oats. And then the same companies at some point might start developing an alternative cacao butter or similar companies. And people are like, oh, well, the cacao was already fine, the alternative cacao, so this should also be fine. So I think we're all developing in a direction where we need more of those solutions. We need more advanced solutions. And the more this climate crisis continues, the more we need high-tech solutions. But does it work to force it on people right now? No. Are they ready? Also no. So the time until then we can use to introduce subsequent innovative solutions, and people get used to eating something different than they have eaten in the last years. And then by the time those very innovative solutions are ready, I think we will see a significantly higher acceptance of products.
Amazing. We have time for one last question, so last chance for someone in the audience. Otherwise, I will ask you for final words. And maybe I want to touch upon one thing that kind of came through already, which is the impact of policy. We have a climate change denier now in the White House. How strong is the impact of policy on this sector? Does this sector sustain even without policy change, just because the products are better, they're strong brands? Or do we require a change also in the policy system for the food system to change? Stefan, do you want to?
I think overall speaking, it's not that easy for Foodtech or for brand solutions in the EU, in the European Union. There's quite some regulations, and we see that in other markets, the road to market for your product or for your solution is just faster, right? So I think if you want to catch up in the EU, generally speaking, we might need to look into lowering some regulations.
I think, yeah, maybe on the topic, and also coming back to the question before, like, to understand what we have to do different to have a more sustainable way of producing food, there is not the tech version, the ag tech version. We know how to do it smarter, and there are just tipping points where we have to act first, right? If it's now ag tech, where we have soil health, and we need to find ways to have a smarter farming practices to also retain health of soil. As much as they're hard to produce things, like if we always start like getting a meat protein or a milk protein from the cow, when we can do it so much more sustainable via technology, let's change this route, right? And I think this is where now, coming to the policy question, this is quite important, because with policy, I mean, what is policy? It's a reflection. It's not politicians deciding, it's a society putting pressure on politicians, and we decide, in a democracy at least, in a collaborative fashion. So if the society and if we all see the pressing need that this is happening, policies will thrive and simplify our innovations that drive us forward. And so I think it's quite important, and we see that in the US when the IRA started, the Inflation Reduction Act, was the 400 billion investment in clean technology. Like all of us, including Archeon, started looking into facilities, building facilities in the US. And if Europe is doing the same thing and we're having this facilitation, then people will go to Europe, especially if you have a climate denier in the White House now. Yeah, so I think it's quite crucial to have these regulations in the end of the day.
Maybe I think so subsidies is one thing. Maybe also specifically on the topic of transparencies or more bottom-up regulations. Maybe this is also something for you to add on. But maybe Sarah, from an investor's point of view, is this something that you look at upcoming policies and say, okay, there might be opportunities, or how do you feel about this?
We do. And within alternative protein, I think it's less because there's less push. Actually, there's a lot of pushback from right-wing governments, like in France, where actually they managed to ban the ban. So now it's allowed to still label it as bacon, something alternative. But I'll mention a couple of areas where we actually see policy driving. One of them is also the one that you're active in, Markus. It's the area of supply chain transparency, of food waste reduction, of reporting, of knowing what you actually use. And there, for example, we see companies like Orbis, Gwino, Kitro being pushed by regulation and hotels having to report and reduce their food waste. So in those industries, we look at which solutions are needed now to fulfill the regulations. And something we talk a lot to corporates, to CPGs. And one area which actually is coming now is flavoring and coloring, because there's a lot of regulation coming up on not being able to use artificial flavoring and coloring anymore. And then you have startups who recognize that, players who've been in the industry, who then come up with sustainable alternatives to do it. And without that, no one would do it because it's cheap anyway, right? So why would you come up with that? And with regulations pushing, there will be a penalty on it. And then suddenly everyone is investing into doing this. So we talk a lot to corporates who have this on the radar, and then we try to understand which solutions would help.
Markus, regulatory push required or consumer pull?
I think it needs both. It definitely needs both, because we cannot rely on politicians to do the right thing. I mean, it's a good day today to talk about this topic. Very, very tough day for me this morning to woke up and see the results in the US, because from a climate perspective, that's really a disaster. And yeah, we see that we live in very volatile times with lots of crises, which unfortunately leads many people looking for simple solutions. And that leads to stuff like right-wing parties wanting to block cell-based or lab-based meat and things like that. So regulatory tailwinds, yes, we need to use them, and they're very useful, and we should use of them whenever they are there. But yeah, it doesn't help. We just need to push through innovation no matter what the regulators do. We need to rely on the small 5-10% of sane people out there who really want to do the right thing, but also we need to understand there is nothing such as a green premium or people who are willing to pay much more for greener products, and we just need to innovate ourselves out of this crisis by producing products that are cheaper, better, and more climate friendly, and that's ultimately the only path to be independent of regulation and to be independent of political shift that's going on at the moment. Because as you see in some US states that are super conservative, where still solar panels are all over the place, because it's just the cheapest way to produce electricity, and we need to achieve the same in all other areas too. Things happening right now make it harder, make it more difficult, but we need to do it anyway. That's the only chance we have.
But to end on a positive note, I think that's exactly what the people on this panel here are doing, investing and building great food solutions. I really hope we can very soon try amazing products built with precision fermentation and other amazing technologies that you invest in, or build amazing brands so consumers actually buy those products. So that's also an important aspect. With that being said, thank you so much for listening, and thank you panelists for joining us here. Have a great day. Thank you very much.